By the time you're watching vendor demos, you've probably already made the mistake that's going to kill your business transformation project. You watch three vendor pitches, you pick the best presenter, but 18 months later, half your team is still living in spreadsheets. It's not the software that gets you, it's the processes you never bothered to fix in the first place. I'm Mike Hiley. I'm a chartered accountant, and I've spent almost 30 years implementing ERP and financial systems for professional services firms, including 14 years inside WPP, running those exact types of projects across multiple countries. You're not selling a product, you're selling your time, your skill, and your judgment. And that's a completely different thing to run through a system. A generic system built for inventory and manufacturing won't tell you if a project is profitable while it's still running. It won't connect your pipeline to your resourcing. It won't tell you which clients are actually worth keeping. Your ERP needs to manage the whole journey from pipeline through to project delivery, through to cash in the bank, and not just your general ledger. The first mistake we often see is that the business gets wowed by the software before they even start looking at their problems. Before you start looking at a single product, write down what's actually broken in your business. Do your projects go over budget? Do you know who's available next month, or are you just guessing? Are your timesheets late or missing? Are you doing timesheets at all? Are you building invoices by hand? Do you only find out a project's profitable after it's finished, or at the end of the year when your accountant gets involved? If you said yes to more than two of these, you have a strong business case. And write it down before you talk to a single vendor. But if your goal is vague, you're going to have a vague result, and you won't even know if the project worked. Every problem you wrote down needs a number attached to it. If invoicing is slow, measure the delays from month end to invoicing. If timesheets are late, measure the percentage that are submitted on time. Get those numbers now, because you'll need them to prove that the project worked. Mapping your processes before you write your requirements is the step that almost everyone skips, and it's usually the one that comes back to bite you. Document how work actually moves through your firm today, from a new business opportunity, through resourcing, time entry, billing, and the financial close. Find out where information gets typed in twice, or a spreadsheet is doing the system's job, or where approvals fail. If your process is broken, don't automate it. Fix it first, and then figure out what the system needs to do. A requirements list only works if it forces you to make trade-offs. Group everything into buckets: project management, resourcing, time and expense, billing, reporting, technical requirements. Then rank every single item as either a must-have, should have, could have, or out of scope. If every single item you have is a must-have, you haven't written a requirements list, you've just written a wish list, and any decent vendor will spot that in about 5 minutes. Speaking of vendors, never let a vendor run a generic demo. A generic demo shows you their best features, and of course they're going to gloss over their weaknesses and their system gaps. So send them real scenarios ahead of time. Things like converting a one opportunity into a project, building a resource plan, flagging a project that's running over budget, preparing an invoice, and obviously don't forget things like recognizing revenue. For every feature they show you, ask if it's standard or if it's a customization that you need to pay for. Ask if a current customer can show you the same workflow live in their production system. Another common mistake we see, or we often see, is that businesses underestimate the total cost of ownership. The license or subscription cost is the smallest number in this whole decision. Add up things like the implementation costs, data migration, integrations, any customization you need, training, and of course, don't forget your team's time, or even better still, the time of backfilling the roles that you need. A cheap subscription with heavy customization almost always costs more than the pricier system that fits out of the box. Next, evaluate the implementation partner as carefully as the software. Most of the time when the ERP project goes wrong, it's not the software, it was how it was put in. So ask who's actually going to be working on your project. Ask if they've implemented this system for firms your size, your industry. Ask what they assume is in their scope and what usually causes the delays. Finally, don't forget to get references. Talk to customers who look like your firm. Same size, same industry, same billing model. Ask what took longer than they expected. Ask what costs surprised them. And ask if they would choose the same vendor again. This conversation tells you more than any demo will. You're not looking for the ERP with the longest feature list. You're looking for the one that actually fits how your business runs. Define that before you talk to a single vendor. If this helped, please do subscribe because I cover ERP, AI, and finance for professional services firms every week.